Hey everybody, Jim Malone here. It is Dallas Trading Floor, and it is a Thursday. It's a Thursday, and it's the 24th of September. And guess what? The market is in correction. Yeah, it's happened. It's happened. What does that mean? Well, what that means, very simply, is this: we are in correction, and it is a time to be in cash, and it is time to be very, very careful when it comes to um, the market. It's just an interesting period of time. Let's see. There we go. Okay. Well, I didn't quite get in there, did I? All right. So let's see if I can get on TikTok. Wow. Okay, great. Go live. There we go. Okay. Now I should be live on both platforms. By the way, everybody, if you're looking at me on TikTok, I'm also simulcasting this on Dallas Trading Floor on YouTube. It's at youtube.com/Dallas Trading Floor. And we are in a market correction today. It's September 24th. This is Dallas Trading Floor number 138. And it's basically the time to get into cash. If you're not into cash already, get into cash because we are going to see a correction in the market. Now, what is a correction? A correction is a 10% difference between the high, which was made on September 2nd, and the low, well, currently the low, today, the 24th. So basically, we went all the way from the high in the market to a correction in 22 days. That's basically 3 weeks. So, that is what it is saying. The market is saying, hey, there is going to be a pullback. And even though we may have had a little bit of a bounce today, it's really a dead cat bounce. So we got to be careful. The big funds are starting to pull some money out. So it's uncertain. Now we may move higher. We may move into an uptrend once again, but right now we're in a correction. So basically the safest place to be right now is in cash, and then possibly if it continues, then we will be shorting stocks. I actually opened a short on the spider today, and hopefully that will work out. With these corrections come, it's not the end of the world, but nothing goes up straight. So you got to be very careful when these correction comes and adjust your trading style to that, because remember, you don't want to fight the tape. You want to always be working with the market and not against it. So that is basically the situation. Now, even though we're in a market correction and you should be moving to cash, guess what? The NASDAQ is up. So wow. So it's kind of like, yes, the market in general is down, but the NASDAQ is up. Why is that? Well, nothing goes down in a straight line. So that's the situation that we're having right now. We're not going down in a straight line, and the Dow Jones is off, but here it is. The S&P 500 is up, and so it's kind of a mixed bag, but definitely we are in a correction. And I want to show you this chart. This is an important chart as to kind of gauge the market, the overall market correction. And this is the spider. This is the world's largest ETF, and as a matter of fact, it's worth trillions of dollars. Many people have their entire life savings in this. So this is one of the reasons why, if you do a very simple strategy, there's a great strategy out there. It's super simple. All you have to do is, when the market is in a confirmed uptrend, you're invested 100% in the spider. When it moves to a market in correction, which has been basically for the last week, then you want to take 50%, sell 50%, and have 50% in cash. And then when it moves to a correction like it did today, well, you want to get all in cash and wait for the uptrend to continue. Now, when this slide was taken, I think it's moved a little bit more. I actually shorted it at this point. When the slide was taken, it was at 324.22, or down $6.43. Now, what is an important number on the spider? I believe, based on this chart, that we are going to see a retest, and we're going to see a retest right about 300. So potentially we could go down to 300, but we could actually it may even fall through that and get another retest at about at about 275. So that's what I'm looking at this chart. I definitely see it moving back to about the 300 level. And what that means for everybody is that if you're in the spider or if you're in any of the stocks that are in the spider, they're going to be moving down. So you want to be careful. You want to protect any of your profits. Now is the time, if you have profits, to kind of cash out, or if hopefully you did cash out a little bit earlier, but now is the time to cash out, because we're going to see a pullback in the market. Now, even though the QQQ, by the way, this is the NASDAQ 100. It's a very, very large ETF, and it checks the NASDAQ 100. Basically the good stuff is, Apple and Microsoft is all in there. But it has fallen too as well. It's down to 267. It broke through a key level, that key level being about 275 on the Qs. So we are lower than that. We do have some significant selling going on. It basically made the break basically back here at the beginning. About September 4th is when it kind of broke down to the 50-day moving average. Now, why is this 50-day moving average so important? Well, this is where the programmatic traders trade. It usually what will happen is that if everything is going good, it will pull back down to this line and it'll bounce up. Well, it pulled back down the line, it bounced up a little bit, but then it bounced lower, and it's kind of like lower and lower. So it's bounced through this. So next stop is the 200-day line. Now, it may not get all the way down there. But remember, back in back in March, it went way down. It was way lower than 200. So the Qs could definitely move much lower. This is why you need to really protect your positions right now. And in cash is the place to go. Now, what's so screwy about this is that you would think, well, if the Qs are going down, shouldn't the SQQQ be going up? You would think that, wouldn't you? Well, let me show the chart of the SQQQ. At least this was taken this morning. And as you can see, no, it's going down too. And this is odd because typically the SQQQ is what follows the Qs, but in an inverse way. So right now it's a little bit uncertain. So it's not necessarily the best time to be in anything right now until we get really good confirmation on direction. But what I'm doing is I am shorting the spider, and that's a pretty mild sport. There's also potentially we can go and possibly be buying some puts, but that's really to see how long this is going to last. Now, here's the thing: the market downturn will last until we get a follow-through day, and the follow-through day will come, and I will be announcing it on this show, absolutely. But right now, the market conditions have changed. They've started to move down. This is a market, not in free fall, but it is correcting. No markets go up straight. We had a tremendous move up in the market from about March 23rd all the way up to really basically about 21 days ago, and that's when the market started to change conditions. So I'm just for full disclosure, I'm going to show you what I have long, what I have short. I only have 2 long positions currently. That's Oracle and Taiwan Semi. I may get kicked out of Taiwan Semi. I did go into the short on the spider. I did go on the short on the spider, but only one full position. Most everything I have currently is all in cash. So that's that's kind of where I'm at in that whole thing. So if you want to get in touch, it's super easy here at Dallas Trading Floor. I have an email address at dallastradingfloor at gmail.com. And also, if you'd like to sign up for the free trade alerts, super easy to do, www.dallastradingfloor.com. And if you're watching on TikTok, it's also easy to get on the subscription for the free trade alerts. And all you have to do is go to my profile, hit the link, and you'll be taken directly to the sign-up page. And of course, it's all free. So, and without more ado, let's get into some of the questions. Thank you for all waiting, and I hope everything is going well for you. You put on the red arrow. Is it March all over again? I'm all in cash. Okay, trying to find a good spot to go into Tesla. Yeah, right now, yeah, I did. Thank you for watching, and thank you for noticing that we are indeed on a big old red well, look at that. Here's the thing about Tesla. Tesla is taking a bullish move, and I'm just going to show you the Investors Business Daily. It's really tough to say. I mean, we're definitely having a bullish move on Tesla. So Tesla is moving all over the place, but be very, very careful. This is the front page of the Investor Business Daily for today. Basically, the small caps are up. They're leading, which is interesting because usually it's the big caps that are leading. It's the big caps that are being sold off, and a lot of people are rotating into the small caps. So be extremely careful here because there isn't really any clear direction in the market. I just kind of want to take a look to see kind of how Tesla is trading because that's a key one. And let's see how Tesla is trading right at the moment. It bounced down. I was shaken out and of my positions, and I'm not in it currently. So there might be a dead cat bounce here. Yeah, there's definitely some dead cat bouncing going on. So let's look at that. That's the thing about Tesla. It's definitely seen a little bit of a bounce here, no question. Let's look at the daily for that. I just want to kind of look at the daily and then possibly at the 10-minute chart. Yeah, what it did, it pulled right back to the see, this is interesting because this is a very, very, very interesting chart. You see, it found support. Interestingly enough, Tesla found support at the, at the at the 50-day line, and that basically, as you can see right there, it's 359. That's the pivot, and it went down to that, and boom, it started to move back up. So that's good that Tesla is showing support at that level. I'm still a little bit leery to get back into the issue because we'll see what the overall market is doing, but that's very good. Tesla showed support there, and I think that we may have seen the worst of the selling, hopefully, but it's not time quite yet to go back in. I will show you a 10-minute chart here of Tesla, and this kind of shows you kind of how it's trading. But there's a huge spike here, basically that basically has just happened. See this big old red spike here. There is some definite selling at this level. It spiked up to 388, but look, it's going down. I think it's going to find support at 359. That's what this is showing. It's going to find support at 359. It did earlier in the day, but right now it's a relatively difficult time to buy it. Just because it is volatile, but I'm glad it's finding support. I really am because I don't think it's going to fall out of the sky. But right now you definitely can get your lunch eaten if you're not careful on it. You can definitely do it. So we'll be back. But right now I'm on the sidelines. I'm on the sidelines. Okay. Does the market correction mean we no longer in uptrend on pressure? Yes, we are. Well, we're not. Yes, we are in a downtrend. Absolutely. That's a very, very good, insightful thing to say because yeah, we are in a downtrend. So here's the thing: in an uptrend, it's easier to pick a really good stock because everything is going up. But when we get into these downtrends, it can be really, really difficult because most of the stocks are going to go down. That's as of the normal thing. So you got to be super careful in these downtrends. And basically, the first step really is to get into a cash position in order to take advantage. And then kind of it sucks because it's kind of a waiting game. You can do a few things like short the spider like I do and possibly buy puts. But basically what you're doing is you're waiting for that follow-through day to happen. And then that's kind of gives you the all clear signal. It's time to get back in the water. It's sort of like, in Jaws where there's a shark attack. So that's kind of what it is like. So let's take a look at Apple real quick. Because that, I still like Apple, but the thing about Apple is it's so widely held by just so many people, and it's just the kind of thing where it's not finding support at the 40-day line. So let's until it firms up, I'm probably not going to be back in it. I love the stock. I've made very good money trading it, but at least for right now, it's just not working out. The 50-day, as you can see, it's pulled through the 50-day line, and it's moving down a little bit. Now there is a formation on this that there is a formation on this stock. As you can see over the period of time, it's been pretty good. Yeah, it seems to be strengthening up about this 108 level. This is basically a monthly chart, really going all the way back to 2005. So it shows you how spectacular this stock is over a long period of time. But what goes up must come down, and right now it's coming down. It's fallen below the 21-day line. It's fallen below the 50-day line. Unfortunately, the next stop is the 200-day line. I don't think it's going to go that low, but who knows? I do believe though that we won't probably see support until possibly, we possibly could see some support at the 50-day line. It looks like it's moving back up towards that. But I want to see it definitely move above this line before I'm even interested in buying it. So I'm not even interested in buying it until it regains at least 111. So unfortunately, that's the news I have on Apple. Okay, so thank you very much for waiting, everybody, on TikTok. Thanks also for looking tremendously. Okay. When you short stocks, what does that mean? Sell stocks? Well, yeah, actually, it's a really interesting thing. What is a short? Well, here's how it works. Now, unfortunately, you have to have a relatively high authorization in your account. You have to have a margin account, and unfortunately, you have to be level 3. So I don't know if everyone's going to qualify for this, especially on the smaller accounts or the IRAs. But what it is that basically you go to your broker, and I happen to use TD Ameritrade. I also use Charles Schwab as well, and Fidelity. I use several brokers, and you borrow stocks from them, and then you sell them, and then you wait to buy them back. And you say, well, why would you do that? Why would anyone do that? Well, it so happens that you can sell something that you don't own. You just have to give them back the stock at a later date. Now, typically, you don't have to give them back until with these bigger brokers houses until you meet some kind of margin requirement. So you can really sit on a short a long time. Now, the danger, of course, is that the stock will move up and then you'll have to give the stock back and pay more for it. So that's not good. So typically when you short, you borrow the shares like I did this morning. I borrowed shares of the Spider. I then sold them. And then hopefully, at least in my case, not for everyone, Spider, but the price of the Spider will go down, and as it goes down, my stock then becomes cheaper to buy back and give back the shares. So that's how you make money as the market retreats. Now, it's not a very good idea to short stocks when the market is in a confirmed uptrend or an uptrend under pressure, but when it changes to a correction, then yes, it is actually, and so that is shorting. And hopefully, I'm gonna try to present some more information on shorting, just how it works, what it is, the whole thing, and you can do very well. And as a matter of fact, right before the Spider made its low on March 23rd, I was shorting the Spider all the way down from its height all the way down. And then when it turned, and how did I know when it turned? Well, you don't know exactly on the day, but there's this thing called a follow-through day, and I'll be keeping you up to date on that. And that's sort of when the market turns its direction. But right now, the market has turned lower. So we want to be very, very, very careful with buying anything long. We want to be in cash, and possibly we want to short stick. Now, not everything is a good short. So, I wouldn't recommend going out and shorting Tesla because Tesla's bucking the trend. Wouldn't recommend doing it. But the Spider is a very broad index, so therefore it's less likely to be, it won't move against the general trend of the market. And if the trend of the market is down, the Spider will eventually move down until that trend changes. So that's the reason why shorting the Spider can be profitable. Anyways, thanks for this comment. What do you think about IDX for the long term? Well, let's look at IDX. See if I can bring that up on my screen. Well, yeah. Come on, baby. Come on. IDEX. All right. There we go. Interesting. Well, I wouldn't, as I say, because the market condition has changed, I'm not really wanting to be long anything. Now, I am long 2 items. I'm long Taiwan Semi and I'm long Oracle. Will I continue on that? Well, I'll see. I won't sell it until it has fallen at least 7%. I just won't do that. That's how I operate. But I'm not going to open any more positions long. So, looking at this chart, I would say, I wouldn't really want to be in this chart. And the reason I wouldn't want to is because even though this is, a good area, it's also a penny stock. And I think at 87 cents a share, and with this chart, because it's fallen below the 200-day, there is some buying up to the 200-day line, but I think this thing is probably going lower. So your 87 cents could become 50 cents, could become 25 cents. So I can't really recommend it. So, but I'll just for fun, I'm going to look to see. Yeah, I'm afraid I can't recommend it. I really want to buy with a checklist of at least 7 or better. 7 out of 9 of the criteria. And unfortunately, this only has 3 out of the 9. So I just can't recommend this one. I'm sorry. But, it's always good to keep it on the watch list as well. But I cannot recommend this stock. And yeah, you just got to be careful. You just have to be careful. That's all. I cannot recommend it. How low are we going to go? Good question. Good question. There is, this is why I'm so this is why I'm always looking at that spider. I'm just, every show I have it up, and this is the reason why, because this kind of is my guidepost. My guidepost. So I want to show you the spider. The spider basically is an ETF, of course, that is the largest in the world, and it is basically the 500 largest companies that are listed. So it's kind of like the Fortune 500. That's kind of what it's like. So, and fortunately, it's been selling off. So let's kind of take a look at that chart. Well, here's the thing about that. You can see we've crashed through the 21-day. That was the first. When it crashed through the 21-day, that's kind of when we went into the situation. This is a daily chart, by the way. That's when we went into the situation where we had uptrend under pressure, okay? Then we fell through that, and then we fell through the 50-day. And that's kind of really where it's happening. Now, it's pulling up a little bit. It's right now, theoretically, based on the chart, it's right at a buy point right now. This would be actually fairly good, supposedly a fairly good buy point for the S&P 500 spider, but it's not doing so well. So I'm going to say that probably we're going to see some support. We're going to see some support here, but we won't probably see it until about 300. At about 296.93 is where I'm looking for support. That's where it made its low, and it made its low on the 200-day. So I'm kind of looking for some support, hopefully at 298. Now, will that support last? Well, it may actually go lower. And part of the reason it may go lower is because it needs to retest the low. And the low was made back on March 23rd at 211. I don't know if it'll go that low because there's so much stimulus in the market, but we're definitely going to see the market retreat. So right now, you want to be in cash. Get ready. Get that watch list going. I'm going to try to concentrate on the watch list so that I can put it out there for everyone as well. By the way, if you're interested, I do have a kind of an interesting thing, as I call it, my small portfolio. And what this is this is sort of how I'm trading, when I'm trading, and what my watch list looks like. So I'll just kind of show you that. And to get this, all you have to do is go to www.tradingfloor, and then in the lower right-hand corner is where you sign up for that. But right now, as you can see, this is my small portfolio, and I'm basically 3/4 in cash. And as you can see, unfortunately, yeah, it looks like I'm probably going to be losing Taiwan Semi tomorrow because that's fallen below 8%. And that 8%, I typically will sell them if they lose out 8%. This isn't totally real time. I mean, it's real time prices, but I adjust it as it makes from the actual account. But I'm probably going to be losing Taiwan Semi for tomorrow. Probably only have Oracle. And the thing about it is that what I do is I create this thing called the watch list, and this basically has stuff that's in the buy zone. Now, right now, I wouldn't really recommend anything in the buy zone, only because it's a falling market. So theoretically, ServiceNow is in a buy zone, believe it or not. back to the 21-day line, but I still would be very, very reticent about buying it in this market, just because we are on a market under pressure. So I mean, not even under pressure, in correction, in correction. I correct myself. We're in market under correction, so that's where it's going. So that's kind of how low is it going to go. I'm buying on $10 here. DT. I don't mean to. I don't like to be a spoil sport here, but be very, very careful about averaging down. There's a lot of people that you'll see on CNBC, and they'll say, "Wow, it's a great time to buy XYZ company," and I'm going to average down. Don't average down. It's like catching a falling knife. Don't average down. You only want to buy. Here's the thing: you really don't want to buy anything if it's going down. Obviously, you even if the market has turned, you want to make sure that it's on an uptick and it's moving up. So I wouldn't recommend buying on your dips. I just wouldn't. Now, I could be wrong about this, but normally this is the case. Buying on the dips means that you're going to have a overall lower average cost, and that doesn't bode well. So even though Apple may turn around, please don't buy on the dips. We're in a correction. Please don't buy in the dips. It just doesn't pay. It just doesn't pay. Wait until if you're going to go long, wait until we have another we have either another uptrend or go to all cash in. Wait for the watch list. Wait to find a good entry point into some of these things, or possibly even consider shorting, or possibly consider something like the SQQQ, which does it for you as well. Now, is it time for the SQQQ yet? No, it's not. But I want you to get it ready on your watch list, because I do think it can be ready very, very soon. So that's kind of my view on that. Do you think Workhorse can still rise due to the? I can. But the problem is, it's like it's. Have you ever seen those pictures? Like in Alaska, where you have the bears and they're just sitting at the water, and you got these salmon that are jumping up the stream, and then every once in a while they get bitten. And that's kind of the thing I think with Workhorse. Yeah, it's a great company. It's just they're making all kinds of these electric vehicles. I think they're terrific, but they're fighting against the stream, and that's the thing. I just don't want to be in that kind of thing. But that said, let's take a look at Workhorse, because it's a pretty cool company, I have to say. I mean, electric vehicles are basically are going to be the future. I mean, they just are. So these are kind of cool. But I don't like the chart on Workhorse, even though they're going to get this great contract, and they will. I'm pretty confident of that. But look, unfortunately, we have fallen through that buy point. The buy point on this one, on a stage 1 buy point, is 22.90. Well, unfortunately, we're at 22.13. Now, that's not that far below it, but we've fallen below the pivot. We've fallen below the 21-day line. This is a very strong stock, by the way, because most of the stocks would be below the 50-day line at this point in a market in retreat like this is. This is a strong stock because it's only below the 21-day line. Well, I still don't think you want to buy it at this point. I think you want to put it on a watch list, though. I think you want to buy the stock, but I don't think you want to buy the stock right now. So just wait a little bit on this one. It's a good company. I think it's a great story, and I think it's going to be very successful. But this is more of a tactical thing, when not to buy in the market, and we're kind of like that. And it's hard because you got this money, you're sitting there, you're like, wow, I want to do something, I want to be active in the market. But sometimes the best in these drawdowns, in these corrections, sometimes the best place to be is just kind of waiting. It's just kind of waiting, and that's hard to do. That's super hard to do, but I think it will be worthwhile if you do that. Okay, thoughts on Tesla? Well, again, I think Tesla is a super duper company, and I sold out today because my stop losses were breached. Whenever I buy anything, I always put in a stop loss at 7% lower than where I bought it. Then I move that stop loss up as the stock is moving up. Well, yeah, it moved back. It moved back on me, so therefore I got sold out. Now, fortunately, I had sold some call options against these positions, so I was able to buy those call options back at profit. But you know, it's just the market right now is in a sell-off type of frame. This is what's really happening in the market. The market is changed its character a little bit. Now, how long will this last? Who knows? It could last. You could be very short. Like the last downturn between February and March was extremely fast. I mean, it literally only was a pullback for like a month. It was unbelievable. Now, sometimes they can last for years. This is not going to last for years, but I do think there's going to be a pullback into the election. And so I don't think really we're going to see a change in the directives at the absolute earliest before March. I mean, before March, before November 4th. Just don't think we are. Just but that's a guess. But right now, it's just one thing. Was the volume high today? Well, let's look. Thank you for that. Let's look at the volume on the composite, which is the whole thing. So let me see if I can get give you something on that as well. So let me go to the IBD charts here. And by the way, I'm using Investor Business Daily. I don't get paid a nickel from them. I wish I did. They have a terrific site. It does. You do have to pay for it, so that's kind of a bummer. But it is still the very best deal in town. So I'm going to show you the composite of the market right now, so we can kind of get an idea of, was the volume up or was the volume down. Let me pull my little sign down here so that you don't see that. Oops, there we go. Yeah, so take that away so you can see the volume spike. Yesterday there was a very, very strong selling volume. It's right up to the 50-day line. We do have strong, buying back now, but right now it's kind of fighting it out right here, but it's below that 50-day line. So, we don't have super high volume, but we definitely have high volume. And if you look, this is typically a change in the character of the market. And I do think that, that's definitely the case here. So we have to be very, very careful when it comes to buying anything right now, because the market is moving down. I remember you said correction market is your favorite. Yeah, it is actually. Why? Why is a correction market my favorite? You think, geez, did I dance on people's graves? Well, I like it because it allows me basically to find the stocks that have been over pumped up. And one of the best ways to make money on a stock is if it's gone way, way up. Like a good example is Amazon. Everybody owns Amazon. It's great and everything has been great on it, but it's gone way up. And now it might go way down. So let's look at Amazon. Now, I'm not shorting Amazon yet, but I might, and I'll show you why. Because you think, God, why would you do that? Why would you be crazy and do that? Well, the reason is very simple. If you'll notice, we are beginning to have what they call the head and shoulders pattern. There's a shoulder here, and then it's kind of got a head, and then it's going down lower. Now, what I'm going to see is if I see a shoulder that's lower than this here, now that's kind of this up down. If I see shoulders, that's a shorting signal. And Amazon might be a short. Now, how low will it go? Well, I don't think it's going to go that low, but I do think Amazon is likely to move below 3,000. I think it may fall all the way down to maybe 2,500. So there's potentially $500 a shorted share there, which is not bad. So I may be doing that. I haven't doing it yet. I'm going to look at the charts. I'm going to see how much risk I want to take on. But sometimes these correction markets can be very, very good when stocks that have led don't lead anymore. And that's kind of where I'm at. So that's why I do like the markets in correction. That's why I do like the markets in correction. What are the costs of fees associated with shorting a stock? Well, actually, the odd thing, you have to have the authorization in your account. So I don't recommend it necessarily for everybody. You necessarily can't get it, but you have to have what they call a level 3 authorization in your account. Now, there are some requirements. You have to check with each. You have to check with Robinhood. You have to check with all this. But basically, interestingly enough, because you're selling the stock, you're borrowing the stock and then you're selling it. Initially, and this is going to be very strange. This is kind of weird. This is the bizarro world of shorting. Um, you're going to actually have more cash in your account than when you started. So you're borrowing the shares, you're selling them, and well, that cash has to go somewhere, right? Well, it goes into your account, and that sits there. It just sits there. Now it's restricted cash. You can't withdraw that cash, but it sits in your account. Pretty interesting, isn't it? Then, if the stock goes down, you then buy back the stock. And you guess what? You use the cash that you have in your account that you got from selling the stock that you didn't own, and you get and they use that to buy it back. Now, can it go bad on you? You bet you it can, because if that stock goes up, then you got to buy back those shares, and the money that you originally sold it for is not going to cover it. So you're gonna be a problem. So when you short, what you want to do, at least what I do, is I set a stop loss, but it's not a stop loss going down, it's a stop loss going up. Well, how you do that? Well, it's called a buy to cover. And what you do is you go buy to cover, and then you put a limit, a stop limit on it, or no, I'm sorry, a stop market on it of 5% above where you originally shorted the stock. So it's a very interesting way to play the game. But don't short a stock in an upward trending market. It just is too dangerous. But in a market under correction, it can be a great way to make money. And I certainly did at the beginning of the year. So that's kind of the thing. Bought 100 shares of Tesla at 418. Keep or sell? Well, I think what you ought to try to do here, Mohammed, is possibly. I think Tesla is going to move up a little bit. I think Tesla is going to move up a little bit, but um, I think if the trend of the market is down, it's probably going to follow the trend eventually. So what I would try to do is I would try to see if you could sell out, sell your position out, or possibly possibly sell a put. There's some other hedging strategies, but what I would probably try to do is I do think eventually it probably will move back up to 418. I really do believe that. In the short term, not so much, and you might want to hedge your position. And you can buy puts. I mean, you can, and so that should hedge your position. So that's how I would look at doing it, possibly. Sell it. Yeah, I think so. I probably would say sell it. I don't like to be, yeah, sell it. Sell it. You can always get back in. During the stock market, just hoping to make my bread. Yeah, you will. Just keep on it. I've been doing this. I started as a hobby 20 years ago, and it's certainly been good to me. So, ups or downs? Okay. Well, okay. Sorry to hear about that. Bought Tesla at 448. Ooh. The question is, I mean, I think it'll come back? Yes, but the question is when. Why take any more pain? Why not, sell now and then put your money to work somewhere else? That's my thinking on it, anyways. That's my. Sell it with a 40K vote. Well, um, one of the things in this business is always, if it is selling for 7%. Here's why I always have the 8% rule. Where did I get that? It's like, where did I come up with that? Well, I actually didn't come up with that. That is actually a very, very interesting person came up with that. With that particular rule, and that is a very, very famous speculator named Jesse Livermore. And Jesse Livermore basically concluded after selling and making and losing lots of money, that there's a sort of a break even when it comes to anything related to you're related to the stock market, and that is that you typically have 8%. You don't want to take any more than an 8% loss, because recovering it is very, very difficult. So let me just kind of go over here to the screen and take a look at where I think that you should sell this. if you have it. So if you bought it at 448, then you're gonna multiply that times 0.92. That's going to give you an 8% down. So you should be selling that at 412. You should be selling on at 412. So that is kind of, the way I think about it. Now, let's say you have it at 417. Okay, let's say you bought it at 417. This is Tesla, and you're looking at where should I sell that to cut my losses? Well, that would be 383.64 if you had it at 417. That's where you'd want to sell it. So if it's below that right now, what you might want to do is put in a limit order to sell it at that price. That might be helpful. That might allow you to basically get back some of that. So that's kind of my that's sort of my general take on it. But that is one of the reasons why I am so I'm very careful with my stop losses, and then I always try to be to be at that 8% level. So let me see if I can get, there we go. Oh no, get back, there we go, back to there. So if I can get that back. So that's kind of where I like to be when it comes to potential losses. So let's see, next question. Okay, bot, it just, yeah, I think you might want to be out of that. You might want to be out of that. All right. Let's see. If you have shares for Tesla, just keep it. Okay. Well, that's definitely a point of view. I don't agree with that. I don't agree with that point of view. But you know, um, you know, there is one of the things about the market is, you do get situations where you end up paying a little bit of a stock market tuition, and that does happen from time to time. So it's kind of that, it's kind of that thing. So I would just be very careful when it comes to that. I just would be very, very careful in terms of that. So let me go back to the screen over here. All right. Well, okay. Yeah. Oops. I'm trying to get my stock charts back up here. I've seemed to have momentarily. Yep, I got to add that to the stream. There we go. Well, heck, I am not getting that. Oh, goodness gracious. Well, I'll go back to the regular screen. There we go. And hopefully I can I can get those screens back up. So let's see. Next question. Short-term investors. Okay, well, call or on shill. Probably a. Thank you. Okay. Have Tesla at 412. What should I do? Just hold on. If 17 shares, you know what? If you're down more than 7% on that, and you probably are, I would consider, at least selling it for now, and it'll move up a little bit. At least selling it for now, and then possibly, doing, and then do something later on that. So. Yeah, that's what I would. That's kind of what I would recommend for you on that right now. That's sort of what I would be doing on that. I would be selling it if I was, basically out more than more than 10%, more than 8% down is where I would be definitely doing that. So. I just screwed that up again, didn't I? All right, so let's try that again. So hopefully I'll get, there we go, new window. Oh, there we go. Okay, super. There, I'm back. I'm back. Oh, gosh, too many buttons here. Okay, great. There we go. Yeah, we're back with the screen. Super. All right. So let's see your thoughts on LCA. Let's take a look at LCA real quick to see what we've got here. LCA. Oh, goodness. All right. Okay. This is blank check company. Well, I don't know. I know that these SPACs are getting a lot of love as of late, but I just can't be excited about them. And see how that's pulled way back down. Yeah, nobody knows what this is investing in, and so people are just selling it, saying, "Hey, we don't know. We don't know what we don't know what we're buying here. I can't recommend this. This just doesn't meet any criteria that I like. It just doesn't. Does it have any owners? It has no funds. It has nothing. Well, let's look at the checklist on this one. Yeah, no. 5 out of 9. I can't recommend it. I'm sorry. Oh, sorry about that. I cannot recommend this stock at all. So please be careful. Thoughts? Thoughts on Bank of America and TD? Well, I actually, just for full disclosure, I use TD Ameritrade, and the Toronto Dominion Bank is probably one of the best banks, probably in the world, actually, in terms of their capitalization. That said, I don't like the banks very much. This is a very low rate environment, and banks have a lot of trouble making money in this kind of environment. People are being very cautious. This is not an inflationary market. This is a deflationary market. So you got to be extremely careful. I don't like any of the banks, to be honest. And I'll show you the Toronto Dominion Bank chart. And it does, I mean, for a bank chart, it's good. For a bank chart, it's very good, but it's basically below the 200-day line. So I can't recommend this one. I cannot recommend. I cannot recommend Toronto Dominion Bank. But just let's look at the criteria. Yeah, unfortunately, it just isn't there. It's got, now I use basically 9 key William O'Neill William O'Neill criteria in order to buy a stock. Not only does it have to be in a good pattern, but I want to buy the stock that's got the right factors going for it. And unfortunately, this doesn't have it. I need to see at least 7 out of 9 criteria on the checklist. This only has 4 out of 9. It's in a declining chart. I am sorry, but I can't not recommend this one. And I really can't really recommend BFA either, because it has the same problems. It's also a very, very good stock, but it just doesn't make the list, just because banks just aren't doing that well in general. Even the very best money center banks like Bank of America. And as you can see, this is a downward trending chart too. It has a relative strength of 27. That's not good. It only has 4 out of the 9, basically with Toronto Dominion. These are both money center banks. They're excellent banks, but you just don't want to be in the banking sector. You just don't want to be in the banking sector right now. It's just not the place you want to be. It's just not going to help, unfortunately. Okay. Keep the shares, Muhammad? Oh, okay. Well, Tesla is the future. I agree. But, what I like to do is I like to sell. I like to sell, limit my losses, and then I like to find other places where I can put money to work. And right now, that's probably going to be shorting shares. All right. When you are not in a loss until you sell, earnings are coming from Tesla shares. So absolutely. I mean, I'm not down on Tesla, but don't make the mistake. Don't make a mistake of holding on to something and losing a lot of capital. It's better to sell now. Put your money aside, wait, and then when it starts to move back up, then you jump back into Tesla. But you don't really want to take more than about an 8% loss. Trust me on this one. One of the most famous stock speculators in the world came up with this figure. His name is Jesse Livermore. You can look him up on the internet. He will, and basically he was the one that shorted the market in 1929. Now, people hated him, but he became one of the richest men in the world. And he was also he was the first billionaire. And by the way, he was the first billionaire in the world to never have a company. So, very interesting man. And he came up with this idea. So, this is not an original idea on my part. Not an original idea. But you want to be careful. Don't try, preserve your capital. That's the key. By the way, I want you. Hey, thank you, man. I appreciate you watching. Really do. What broker do you recommend? Well, there's a lot of brokers out there that are really good. So I can't, I'm not gonna, I'm not going to say anything bad about anything else. I personally use my two main brokers are Charles Schwab and TD Ameritrade. Now I don't get a nickel from either of them. I wish I did. God, that would be richer. I don't get any money from them, unfortunately. And maybe I can make that change. I do have over 27,000 people that watch me on TikTok, and the numbers are growing great on YouTube. Thank you, by the way, everybody out there. I so appreciate it. Now, those are the two I recommend. Now, but you might not like their app as much as one of the things I will say about TD Ameritrade. They have a very good app for the iPhone, and that's what I use. So, and also for the Android too. It's good for Android, but it's particularly good for the iPhone. It seems to work very well. It's called Thinkorswim, and it lets you, see the market, and I think it's a very, very good tool. That's who I recommend as my primary. But Robinhood is good. There's a lot of people on that. The only thing about Robinhood is they typically, in bad market conditions, can have some problems with their execution. So, but my two favorites, Charles Schwab and TD Ameritrade. By the way, Charles Schwab bought TD Ameritrade, so fortunately it's not going away, but it's still. It's kind of a lot of concentration in that industry. Is there a margin cost associated with shorting? Well, no. And you say, well, why is that? Why is that? Because when you short, you take the money and you put it into your account. So you're not borrowing any money, technically. Now, can you spend that money in your account? No, it's restricted cash. But no, there isn't, and that's the thing about shorting. I mean, when you start to figure it out, you go, man, how could this be? How could this be? This is an upside down world. But really, it isn't, and that's why there are many people that make a lot of money shorting stock. Our next question. It looks like we will close in the green tech. Great. Absolutely. Well, we definitely might close in the uptrend, and I hope we do. I hope we do. I don't necessarily. I'm not a big fan of markets in a correction, but we won't be back to a market in uptrend until we have a number of factors. It has to stay. We have to have what they call a follow-through date, and I'll be talking about that a little bit more. But when it's changed character like this, in order for it to come back to a market in uptrend or a market in uptrend under pressure, the only way it won't come back to an uptrend under pressure won't come back. It's got to come back to a full market it has to come from a market in correction all the way back to a market in an uptrend, and so that will take a follow-through day. So the answer is probably not. No, it may not. It may not, because we have to have a follow-through day, and we won't have that probably this week. Maybe we'll have it next week if it would be a very, very short correction. I don't know. Thank you. Yeah. I like that picture too, by the way. Great. I'm glad you're in cash. I know this is the hardest thing. Going to cash is really hard for everyone because you're like, man, I want to invest. I want to do this. But sometimes not. It's not the way to go until it changes direction. All right. So let's see. In the end, there will only be in the end there will only be Robinhood. Maybe. I mean, maybe. Robinhood is, they've got, they're growing really fast. I mean, I think they're the fastest growing broker in history. So yeah, you might be right. And I'm trying to see if I can do things with Robinhood because I think it's a very significant platform. So I don't happen to use it, but that's because I'm kind of an old fuddy-duddy. I mean, I'm not, I'm trying to get more. Yeah, I'm getting old. One advice to everyone out there: try not to get old. Okay, that's the worst thing that can happen to you. No, it isn't the worst thing, but try not to. So, anyways, but I'm going to try. I'd like to do something with Robinhood because I do think it's very significant. Never, never mind. Okay. Oh, I'm with Wealth Trade. Okay, there's a lot of good ones out there. By the way, they all kind of feed into the same general engines. There's one called Citadel, which basically clears a lot of the trades. So they're all kind of, if you're a programmer, you're basically sending to basically another a service like Citadel that basically lines up all the trades and actually makes them, puts them all together. So, kind of cool stuff. All right. Do you think Tesla is going that? Well, I think Tesla has shown some strength. I'm telling you, even though this is a down market, Tesla has bounced off the 50-day line. That's very strong. That's very strong, folks. I mean, I'm not dogging on Tesla. I still am a Tesla bull. I will be honest with you. I am a Tesla bull. I just think that, right now, because I'm a trader, and I'm not an investor, because I don't have, millions of dollars. I mean, I have some money, but um, I'm a trader, so I'm waiting for the market to sort of, move down and then find its legs and then move back up. But it's very, very good. I mean, they're I want to show you the chart again for Tesla because I think it's very interesting. This red line here, this is the 50-day. Now I'm looking at the daily chart. You want to start with the weekly chart to find trends. But it pulled down below that 50-day and then it bounced up. So that's a good sign. Now I want to see if it bounces again off this 50-day. I want to see it retests this and bounces again. But that's really why I am not in the shares right now, because I do believe it's going to bounce up and then it's going to come down. It's going to bounce up and then come down. So I want to wait until it's kind of done a bottoming process. That's my only thing. That's my only thing. Do you think the market will stay down until election? Well, probably. Probably. There's just a lot of uncertainty. I mean, there's a lot of uncertainty. I mean, a lot of, as the economy opens up, a lot of people are not going to have jobs, especially in the travel and leisure industry. I mean, here in Dallas, where this is American Airlines headquarters, also Southwest, they're looking at laying off 15,000 pilots. That's amazing. That's a lot. And of course, that's just because there isn't as much demand. So I don't think the other shoe has dropped yet, and I'm not saying that gleefully. I don't. Having lost my job many times in my career, until I got smart and learned how to trade. By the way, it's not a fun thing. It's not a fun thing, and I do think that's going to happen to a lot of people, and I'm concerned about it. So I do think it's going to change until the uncertainty is lifted. Until we find out really, what direction the country's going to go in. We're going to stay with the same president, or we're going to take a new one, or I think that it's going to affect the market. I just can't see how it wouldn't. But it's not that long. It's not that long. So no market can stay down. It's like no, you're not. Don't say that. Don't say that. Markets go up and go down. It's just is there an option of stop loss in wealth? I don't know about that. I'm going to have to look into that. There is almost every platform should have a stop loss. I don't trade without them. I literally don't. I don't. What I do is I set a limit, and then that's how I usually sell out of stock. Is that I will do that. I use them extensively just because I can't watch the screen all the time, and yeah, it's good. Averaging 210 Tesla shares at 325 a share. Do you say keep or sell? Absolutely. I believe now if you do have an average price of 328 a share, I say absolutely keep them. Absolutely keep them, because you're not in a loss position at that level. If you multiply that 328 times 0.92, that's where you're going to sell. So I would hold them. I absolutely would hold them. It's only in the loss that if you buy the shares and they're down more than 8%, that's where you sell them. But if you have an average in there of average of cost at 328, I think you're in good shape. I think you're in good shape. But I would set a stop loss at 0.92%, 92% of that number, giving you the proper stop loss. So I would do that. I would definitely put that in there. Do you think a trailing stop loss? You know what? I don't like trailing stop losses, and the reason I don't like them is in volatility, in the market volatility, trailing stop losses recalibrate every day. So I don't like them. What I do is I just do a hard stop loss at market, and that's been over years. I've always tried to do that. It's frustrating because sometimes you'll get shares and you'll get pushed out, but it's been always, I've always found that it protects my capital a lot better, and that's the main thing. That's the reason you have stop losses, is to protect your capital so that you can come back and fight another day, because there's always ways to make money in the market. Trust me on that. There always is. But the character of the market changes, and you don't want to fight the tape, as they say. If the market is going down, then you want to do the things that are going to benefit you on the way down. If the market is going up, you want to be benefiting, you want to do the things that are benefiting you on the way up. It's just, that's why I'm so big on showing the market direction at the beginning of the show. And I really appreciate everybody taking a look and watching. By the way, if you want to get my action trade alerts, super duper easy to do. All you have to do is go to www.Dallas Trading Floor and just sign up for those. Matter of fact, I will show you the website. Right. Oh, wait a minute. Is that? Do I have the website up? Let me. Oh, okay. There we go. This is what the website looks like, everybody. This is Dallas Trading Floor, the website. And if you want the free trailers, just go to the www.Dallas Trading Floor and just fill in your information here, first, last name, and email, and then hit the subscribe button. Love that. Also, also we have the access to the small portfolio, and I send you a link for that. That's right down here. Sign up for that. And if you want to just ask a question, hit this button that says Ask a Trading Question, and I'll try to get back to you as quick as I can on that. Now, I also have some other things on the site that are kind of interesting, and this is learning how to trade. Well, I use the CanSlim method, and this is used by most of the top traders. Matter of fact, in the last 20 years have used CanSlim. David Ryan, I think he's run it 3 or 4 times. I can't remember how many times. He's super expert. He uses the system as well as many, many other top traders. And in order to get kind of started in that, I would recommend going to my website, of course, Learn How to Trade Bookshelf, and going over here to How to Make Money in Stocks, a Winning System, Good Times or Bad. This is the green covered one. This is the green covered one you want to go with. This other one here is sort of the cliff notes for the green one, but the green one is the one you want to start with, and those are the 2 that you really want to start with. Now, if, there are other things as well that I want to kind of put your attention to, and this is, because we're in a down market, this book shows you how to short stocks, and that's also on my website, and it's by William O'Neill. It's called Make Money Selling Stocks Short, and that's a really good one too. So I just wanted to bring that up with my site. Again, it's www.Dallas Trading Floor, and everybody, I will see you tomorrow at the same time, 2:30. Thanks so much for watching, and happy trading.